Tony Crescenzi wrote the book on this chart, which is short-term interest rates. The two-year yield the Fed funds target rate. Fed funds target rate adjusted for inflation. Here's Fisher, ultra-accommodative. Here's Powell and Clarida, right at neutrality. We got miles to go to some form of normal. How ultra-accommodative are we as Chairman Powell steps to the lectern today?
One could just simply look at the 5 transmissions of monetary policy. Stock prices, they're wobbling a little bit. Credit spreads, they're a little wider. In other words, more expensive for companies to borrow today. Yields are a little higher, although they've stopped rising. The value of the dollar rising, which means it's more difficult for the U.S. to sell products, and we're more likely to buy goods from abroad. And finally, bank lending standards. They're still a little loose. We see leveraged loans still expanding. So looking at it all in terms of financial conditions, Bloomberg has a financial conditions index. Conditions have tightened, but they're not tight. And we may need tight policy because the economy is still running above where its potential is, which is in the high 1% range. The economy has grown this year around 3, probably grows next year 2.5 would be the Pimco view.
Francine?
Okay, Tony, what's the counter-argument for anything you said? What if inflation shoots up really significantly next year? First of all, what's the likelihood of that? Is it 20% or more?
Well, the bond market's saying it's pretty low. If you've looked at TIPS, the Treasury inflation-protected securities, there's been a plummet in inflation expectations, or at least in the gauge of inflation expectations. Longer-term, medium-term inflation expectations are probably still intact. But the 10-year TIP has gone from a 215 to a 190. In other words, the market's saying the inflation rate over 10 years will be 25 basis points lower than the market previously thought. So the inflation expectations are important. Janet Yellen, a couple of years ago, wrote a speech called Inflation Dynamics, concluded that that inflation expectations are the driver of inflation. So the odds are low for a major pickup in inflation next year, simply because people don't believe it, that there'll be a pickup. But if there is one, of course, the Fed would react to it. This is something that Rich Clarida said yesterday in his speech.